Hello everybody, Brian here from quantlabs.net. Today's video I'm going to show you some interesting things about, if you haven't seen my last set of videos here, this is starting from here. This video I put up last night. Do these tear sheet basket outperform S&P stock market in the last year? So I'm going to continue doing this and show you using baskets within portfolios. So this is the video we're talking about right here, and this is what's going on in the market right now. It's just blood everywhere. Inflation, really bad things are happening. And the thing that really gets me is with these so-called financial analyst media outlets, they don't talk about the real reason why inflation is here and stays here. It's because of the national debt. You want to rack up a $30 trillion debt for the U.S. government with the Federal Reserve driving that, and you're sitting here, you're going to try to control inflation and the interests that serve that debt. Good luck with that. That's why we're going into this financial reset, as they call it. So lots of things that they don't want to tell you. But you can see all the red there right here. So this is what we're going to try to counteract is defensive, a combination basket of ETFs and Forex or currencies to circumvent losses. So let me show you what I'm talking about. So if you like what I'm going to show you, this is very critical if you want to retain your wealth and actually grow it in this kind of environment. And we haven't even talked about potential invasion of Ukraine and all that. I mean, it could get really bad, but this is what we gotta talk about. So here, go to quantlabs.net/contact, and let me show you the first report here. This is really important. So in one of the video here, I wanted to talk about a different combination of baskets. So this one I came up with of corn at 33%, British pound against the Australian dollar, 33%, and euro, Swedish krona, 33%. Okay, this is what it generates. All right, so we're using standard S&P 500s or benchmark. It's giving you, let's say, a 14, 12, 13, 14% return in the last year, and that's since the losses of last month in January. Look how in blue, how this combination known as the strategy on this chart outperforms that benchmark. Okay, so here is what you would get back. Okay, 47% on that combination I just showed you. Okay, 33% spread over those three assets. Here you're only getting 12%. All right, so that's the difference. And when you look at the Sharpe ratio of 0.9 versus 1.48, that is the difference. Huge difference. So you get all your standard stats here, but here's the other kicker right here. So you can see again, our blue, the basket clearly outperforms it at the percent that I revealed, just under 20% for the benchmark at S&P 500. And now just look at this year alone of the benchmark is already giving you over 10% versus losses. And this is the best basket I've come up with, and there's three that I've shown in the last day. Okay, these combinations. Crypto's no good if you use these ones. Okay, but this combination right here, corn, pound against the Australian dollar, and euro against the Swedish krona, is amazingly good. Now people are going to go, why am I not including the U.S. markets? Well, I've shown that in last night's video that it clearly brings down your performance quite a bit. And the other big question is, why not oil? It's going up. Well, oil has already hit its peak price. So now market demand goes down because oil is too high as an energy input cost. But here, the big other one is gold or silver. If you go onto my charts here, this is where I use this MotiveWave as part of my combo. What we're looking for, I mean, this right here is a monthly view of corn. Look at that performance right there. Look at that performance for all last year. Okay, that's one of the big drivers of why we're getting that kind of return. When you look at the euro Swedish, since November, it's just driven right up. Okay, again, that's a monthly or that's a daily view. Okay, when you look at the pound against the Australian dollar, let's look at the monthly view here as well. It's trending up slightly. Now, when you start to look at gold, doesn't matter what currency I choose. Usually, the best performer of, let's say, gold in Canadian dollar. I don't know why, but that seems to be the best performer. Here's your. It's a slow and steady performance. Okay. The other one we can look at is silver, and I can look at that XAG in Canadian dollar. Let's just say, okay. So I'll add these two into the mix. Okay. So in here, what I'll do into that. Well, let me do this. Actually, better. So what I've done in that first combo is I've recorded already the return, the cumulative return, 47, and then this second one is the benchmark, S&P 500. Okay, so our CAGR is at 47% and our Sharpe ratio is at 1.48. Pretty good. So watch what happens when I start adding in gold. So again, these are the popular ETFs using Yahoo Finance as the data source. So we're going to divide this up now by 25% weighting ratio. And you'll see how far down gold will pull everything down in that basket, okay? Let's see here. There's an error in this code. Oh, yes. Good old programming. Okay, so there you go. Okay, so let me rerun this. Takes a minute or so to run it, and you'll see the difference. So again, if you like what you're seeing here, this is getting critical now. If you want to retain your wealth, go to quantlabs.net/contact. Okay, get on our email list. If you don't interact, you could most likely lose money. That's all I'll tell you. Here you go. This is live. All the red right across the markets today. And it's going to get worse as interest rates rise. And then we got the virus. We got this potential war going on as well. All right, so still running. Okay, so right now it's 3:11. Today is the February 11th, I believe, as well. Okay, let me just check the updates here. Okay, so yeah, so it's just finished this report. So we're going to pull it up. Okay, so here's the second one. Let's see how gold is it. So this is without gold, this report here. And again, what we're looking for is the return of 47.15. Okay, so now it's not as high. The report is still looking pretty good, but it's still higher without gold. Okay, and 46% versus 12%, and it's just not as high. I mean, I don't know if you call that splitting hairs, but let me just see here. So far we would have gotten a 6.82% return with that combination and 8.57 return in January of this year. So going down here, the gold would have pulled it back slightly. Okay, so you can see here. In January, we would have got 9.22 return. Okay, but here's the thing: managing baskets is important. Look at the difference now between, and it's now only 11 days in February. So if we maintain the previous basket without gold, we would have only gotten 3.46 return. But when you look at this right here, you're at 6.82%. So it's important to stay on top of this, obviously. These baskets, but it's hard to forecast it. So there's that. Okay, so that's how it is. Now I'm going to add one more in, the silver, and see how that does. Has another potential. Okay, so the weightings, obviously we got to make 0.2, or yeah, 20% among 5 assets. So again, these assets include corn, British pound against the Australian dollar. We can include euro, Swedish krone, gold, and silver now 20% each. Okay, so now I'll just rerun this. Where is the, right there. So again, we got to wait it out. So again, just as a reminder, if you like these sort of things, these baskets for optimal return, makes a huge difference. Okay, so again, just visit here, quantlabs.net/contact. Just so you know, I'll be adding in, I'll be adding in a service, monthly service, now that I've got this complete, to go over this. I don't know, daily, I don't know how frequent it will be. Also I'll have one separate for the crypto and the consulting, which is more tailored to your needs, personal, obviously, as well. So let's go back over to our report, see if it's been generated. I think it has been. Looks like it's complete. So again, yes, that's updated. So let's go with that. The next one. So here we've added in, look at this, wow, huge difference. Look at this. So we just added silver, and look how far back it's been pulled back. So the previous run with gold but not silver, the previous one was 45.83%. Okay, so now look how far back it's been pulled back because we added silver. It's almost 20-30% drop. Okay, so understand this is what we're looking at in terms of, you have to be very careful what you have in your basket of instruments or assets. That is a very stark difference. And look at this Sharpe. Actually, the benchmark, the S&P outperformed by 2 on the Sharpe with silver added. That is amazing. But from what I'm seeing here, actually you would have lost money last year just by adding silver. This year you would have gotten a better return, but let's look at our monthly returns here. Okay, so here where it gets really weird is because you've added silver. Let's see the monthly return here. So the monthly return for January would have been 8.57% without silver, and then 6.82 for February. But look at the difference when you add in silver just for this month, and what it does, it doubles the return. But if you're not managing and frequently managing that basket, these are the massive difference from month to month. To get an 11.27 return in this environment is like unheard of. So if you're managing your baskets really well, you can get these optimal returns. Obviously, it's pretty hard to do because this is just one day of analysis with that big move of silver and gold today, which if you want to see is right here. So let me just show you silver. Like silver, well, gold's right here on the daily. Pretty big moves right there. Because of today's news of the inflation. And that's going to be moving forward, I believe, because inflation is not going anywhere. As long as that $30 trillion debt is there, that's going to be in place for quite a while. Now, the sad thing about these media outlets, they don't talk a lot. I mean, they have these so-called world-leading economists, but they never ever talk about national debt. They never include that. They'll use some other excuse of why, basically why inflation's kicked in, and it's because of the national debt. I mean, there's no doubt about that. So they have two options. They have a couple of options for the Fed, Treasury to fight it. They keep inflation in place to reduce the debt. That's usually number one. That's why you had 10 years of high inflation in the 70s and 80s. Plus, the oil embargo didn't help, but that's why they had high inflation, to bring down the debt. So that's one option they can do that from a political standpoint. That's not most likely not going to happen. The other one is to have really strong market performance, which is the other way to reduce debt. But because this debt is so huge, it's unmanageable. So that's why they're leading into where we're going, most likely, with this economic, financial reset. And that's why they're doing what they're doing. And even though it's beyond our control, there's nothing we can do about it. But, as I said, with these reports I'm showing, these are going to help you be able to retain that wealth and actually grow it by not being in the equity stock markets, because obviously the precious metals will start to outperform, but that's temporary, and it could go back to the U.S. markets again. Or currencies can do well, and as I said, I've added in an agricultural product. And those are, again, it's all about being uncorrelated from one to the other, because that's how you get these really good returns. Ask any high-end net worth portfolio manager. Now, here's the thing. I'm showing you multiple baskets for different types of returns. Question is, would you have, if you had $1 million, would you, because what I'm finding is when you have small instruments in one basket, usually you'll get a pretty explosive return, be it on a monthly, maybe on a quarterly basis. But that's not going to last long. So this kind of methodology would definitely work on a smaller account of up to maybe, I don't know, 100,000, and you only have 4 accounts. But if you're beyond 100 grand in an account, you obviously have to have more assets, broad base, to preserve the returns. But then once you start adding in assets like with what I just showed you, by just adding in silver and how long term, over a year, that performance drops by like 20-30%, that is what can happen. So what I think a way to get around that, if you have, I've talked to a few people that have million plus account size. What you can do is, you can see here we have 5 different baskets. Now some of those baskets may have certain instruments that overlap. So in this instance we have corn in 2 different sub baskets. But if you were to manage, let's say, up to $100,000 in one basket, and have a second basket, and have multiple baskets within a master account, so you can have, let's say, 10 sub baskets of instruments of 4 to 5 each with decent performance, and then be able to have 5 of those with, let's say, 100,000 for $500,000 account, or 10 baskets for $1 million account. You could watch each basket's performance month to month and get rid of it, or rebalance that basket, or put more capital into, if you have certain other baskets outperforming another. There's many ways to do this. I don't know if portfolio managers do this. From the accounts that I've seen, reports of accounts, usually a lot of the accounts will have the same instruments, ETFs, and whatever else for a year or longer, which is not wise, because you just look at gold in the last month, or silver in the last month, is starting to way out, like double than the previous month. So there, it doesn't make sense. Anyways, there's many ways to manage that, and you can kind of automate that as well, regardless of the size of the account. So again, that's just another area I'm going in down the line. But as I said, if you want to know more about I'm going to have a subscription service with these type of baskets available. Just go to quantlabs.net/contact, get on my email list, and I can send you out info on that as well. So we'll leave it at that. Thanks for watching, and have a good day.